If you have an S corporation, chances are you're paying an extra 3.8% tax on the net profits of your S corporation. In this video, I will help you identify that extra 3.8% tax, see if you paid, how you should stop paying it going forward, and if you did end up paying it, how to actually amend your tax return to get the money back from the IRS. Ready? Let's get going. Hey, welcome to my whiteboard tax strategy. My name is Boris Musheyev. I'm a CPA and a certified tax strategist. Every Tuesday, I release a tax strategy video here on YouTube for you, the business owner. By watching this video, my goal is for you to start paying less in taxes right away. So go ahead, subscribe to my channel, like it, share it, and even comment below. I appreciate you. Now let's get started. So let's get started. So I've broken this down into 3 steps for you. So this is exactly what we're going to do. First of all, we're going to identify this 3.8%, which is the net investment income tax. I'm going to refer it as a NIIT tax. Then we're going to talk about who does it apply to, who does it not apply to, and if you have an S corporation, chances are it doesn't apply to you, but you're most likely or probably maybe paying it on your tax return. And then we're going to talk about how can you spot this tax on your tax return, how to question your accountant, and how to amend your taxes. Let's get going over here. First of all, what is NIIT? NIIT is a 3.8%, which is net investment income tax. The name speaks for itself. You pay this tax on your investment income. What happens many times, there are some tax preparers, when they prepare your S corporation tax return, the K1 income from your S corporation that flows through to you personally, they accidentally, right, classify it as an investment income, which may trigger the 3.8% tax. Now, generally, on your net profit of an S corporation, you pay 2 types of taxes. Tax number 1 is the federal tax. The tax number 2 is the state tax, right? If you're in a state that has income taxes in that state, so you pay taxes on your S corporation profit, those 2 taxes. Some S corporation owners also pay an extra 3.8% tax mistakenly, all right? That is the net investment income tax. I've seen many tax returns where when we get a new client and we review it and we audit their 3-year look back, which means we review their tax returns, we spot this tax and then we amend it and we get the money back. Now, what is really a net investment income tax and how did it really creep on your tax return? Let me tell you a little bit of a history. We'll take like a minute into this history lesson, so to speak. So in 2013, President Obama enacted Affordable Care Act, okay, also known as Obamacare Act, which is basically providing health insurance to everybody. So everybody who needs it, they can apply for it. And, you know, all of that stuff with the health insurance. This was back in 2013. Now, to fund this program, the ACA, they've enacted an extra 3.8% tax on those individuals that have a net investment income. So after they did their calculations, they're like, all right, where are we going to get some of the money to fund this? So they came up with this 3.8% tax. Now, the law said that, hey, if your modified adjusted gross income, if you're a single filer, okay, is $200,000 or more, you start paying that 3.8% tax. Now, as you guys know, there's a capital gains tax rate, which is capped at 20%, right? Everybody knows, hey, capital gains tax when you sell a property or assets that you hold over 1 year, and everybody's like, oh yeah, great, I only pay 20% tax. Not necessarily. A lot of you may be paying actually 23.8% tax because of this net investment income tax, which is NIIT, 3.8%. Now, if you're married filing jointly, you're filing a joint return, then that would be, the income threshold will be $250,000. And if you're married filing separately, $125,000. So really just keep those numbers in mind, because if you make this in this, so to speak, threshold in terms of your income, taxable income, then what happens is that 3.8% tax kicks into you. Now, in the next section of this video, we're going to talk about a strategy of how you should know what you need to pay this tax on, what you should not be paying this tax on right after this break. Hey, thank you so much for watching my videos so far. I wanted to give you a heads up. I've got this free PDF, 7 tax write-ups that every S corporation business owner must know. The link to this free PDF is down below in the description. So to make sure to download it, that's it. Now let's get back to the video. Okay, welcome back. Let's get started. Well, I actually forgot to mention that I prepared show notes for you. Okay, show notes to this. Basically, it's a little bit more detailed of everything that I have here in the free PDF below this video. You can go ahead and download it. Also, if you like this video, please help me push this content out on YouTube. Just like it, share it, even subscribe it. So it really helps other business owners to find my channel and learn about a tax strategy and really pay less in taxes. Now, let's talk about who does this really apply to. The 3.8% tax applies to any investment income, okay? If your income is over these thresholds, so let's say $250,000, okay? Let's use that threshold, okay? If your income is over $250,000, there is a calculation done on your tax return how to calculate that tax, right? It's either on the excess of the income or on your investment income. The calculation kicks in of how to pay that 3.8% tax. But what's important to note is not technicality, is what does this tax apply to? Rental income. This tax also applies to rental income because rental income, in most cases, if you're not a real estate professional, is considered passive income. So that is an investment income. So you pay 3.8% tax on that. Also passive businesses. In any business where you're not actively participating and you're receiving a K-1, let's say you're a silent partner or you put in less than 500 hours a year and you're considered a passive partner, well, guess what? 3.8% tax applies to only this bucket. You can't do anything about it, so to speak, but let's talk about what this tax does not apply to. Okay, this tax does not apply to your S-corporation income or even your LLC income. Why? Because that is considered an active income. It is not an investment income. Even though you get a K-1, the K-1 should be marked that is an active income. Okay, it's not an investment income. Now, what happens is that many times when we get a new client, we review their prior tax returns. The first thing we pay attention to is that K-1. How did that prior accountant classify this K-1 income on the person's personal tax return? If they have accidentally classified it as an investment income, and you might say, well, Boris, how can an accountant classify something that is not investment income as an investment income? Really, it comes down to like some simple things, overlooked mistakes, for example, making a checkbox on the tax return or not making that checkbox. So if they didn't make that checkbox, then the software will automatically classify it as an investment income. The software will automatically calculate the 3.8% tax. It's a hidden tax, okay? You don't even know about it. So when your accountant says, hey, you've got to pay this tax, you're like, okay, wow, I'm in a very high tax bracket. Well, guess what? That's because the 3.8% tax was kicked in for no reason, because the income from your S-corporation or LLC has been misclassified. We've seen many of those situations happen, and we've actually amended those tax returns to get back those that money, that 3.8% tax the business owners paid. Now, another area where you will not be paying a net investment income tax is if you have a self-rental. So remember, I said earlier that you pay a net investment income tax on the rental income. But if you have a self-rental, meaning to say you have a building that is not in your S-corporation or in your LLC, it's in a separate entity or even under your personal name, and you pay rent to yourself from the business to yourself. By the way, it's one of the great strategies. You can check out more videos that I have for it. I'll put it in the description below. That income is not classified as an investment income, okay? It is an active income because it's part of your business. It is combined together. It's grouped together with your business on your tax return under Section 469. I'm not going to bore you with details, but it's important to know that if you have a self-rental, that's another area on the tax return where this hidden tax just, bam, kicks in. Now, on this one, there's more mistakes done on this one by other preparers than actually classifying the S-corporation as a passive income. Because when there's a self-rental, they don't even specify on the tax return, hey, it's a self-rental. So the software on which they're preparing a tax return thinks, oh, it's a rental income, so let's kick in this extra 3.8% tax. You really need a knowledgeable tax accountant. If you're working with a tax preparer and only speak to them once a year, I can guarantee you there may be a chance that you are overpaying this tax and really not supposed to pay these taxes if you are in these brackets, in this situation. Now, let's move on to the short-term rentals. If you have a short-term rental, in many cases, short-term rental, if structured properly, can be classified as an active income. An active income is not subject to 3.8% net investment income tax. This is another area of your tax return. If you have, again, if you own an S corporation, LLC, a self-rental, or a short-term rental, you might want to check your tax return. Get it reviewed by somebody who knows taxes and be like, hey, do I pay these extra taxes that I'm not supposed to? You will be surprised how many taxes are there that can be latched to your tax return if done improperly, if the tax return is prepared improperly. The next thing is a real estate professional. A real estate professional, by definition, is an individual who's most of the time is spent in real estate. You don't necessarily have to be a real estate agent, but you may have a lot of properties that you own, you or your spouse, and you guys manage those properties. And really, that identifies you in most cases as a real estate professional. I have more videos on it, so go ahead and check it out. But if you're classified as a real estate professional, and you may know this, meaning to say, if you're a real estate professional, you most likely know that you are, okay, because you're taking all those depreciation losses and rental losses on your tax return. You might want to check if you have a rental income from any of the businesses, are you paying an extra 3.8% tax? If yes, that's another thing that has to be changed on your tax return. So really, it's a huge, huge tax that could be latched on your tax return without you knowing it. Now let's talk about how you can audit your tax return. We'll be back right after this break. Hey, thank you so much for watching my YouTube video. Just a quick commercial break. If you like what you see, please like the video. As a matter of fact, share it on your YouTube so that you can help other business owners to save money on taxes. I would also appreciate it very much if you subscribe to my video. If you like, share, or subscribe, it really helps me with YouTube algorithm, where YouTube will really push this video to other business owners and they can learn how to save money on taxes using simple tax strategies that I teach with my whiteboard strategy. Thank you so much, and let's get back to the video. Okay, welcome back. Again, if you're watching this video so far, please like it, subscribe it, share it on YouTube with other business owners. So content like this can help other business owners pay less in taxes. Now, let's talk about how to audit your tax return. First of all, you've got to ask yourself, which one of these incomes do I have, right? Do I have investment, rental income, which I'm not a real estate professional, or do I have other passive businesses? Also ask yourself, hey, do I have an S corporation, LLC, self-rental, short-term, or am I a real estate professional? Any of these right here, and if you are over the threshold of this income right here, which majority of business owners are, right? Especially like married filing joint, over $250,000, you definitely have this tax on your tax return if you have some sort of an investment income. And then it could be triggering and latching on other activities that you do not qualify on to pay this tax on. So ask yourself, where am I on this chart right here? Second of all, check if you have Form 8960. Form 8960 is IRS form where the 3.8% tax is being calculated on the income that's not supposed to be there, such as your S corporation, for example. If your S corporation, if your S corporation is an active business, question your accountant. If you know your income is over these thresholds and you see Form 8960 or you're in any one of these sections right here, definitely ask your accountant, hey, let me ask you, how much did I pay in net investment income tax of 3.8%? Please let me know, and what did I pay it exactly on? Ask your accountant and amend your tax return. If you find out that you actually pay this tax on the income that you're not supposed to pay, you can amend 3 years worth of tax returns and request money back from the IRS. Your accountant should be able to do that, but I would really recommend, if your accountant has made this mistake, made you pay an extra 3.8% in unnecessary tax, at this point I would tell you, get yourself a tax advisor. I strongly recommend, if you're a profitable business owner and you want to start paying less in taxes, you've got to stop working with somebody who you're meeting only once a year, sending them documents to prepare your tax return, to put the right numbers in the right box. It doesn't matter who it is, a CPA or EA, it doesn't matter. If that person is just a preparer, what you need is to get yourself a tax advisor, somebody that specializes in tax strategy and helping you pay less in taxes by really catching things like this. Thank you so much. Until the next time.